Okay, so I'm going to look at something very interesting that happened in BitMEX in the YFI pair yesterday evening. So first of all, I think I will just briefly explain what is mark price. So mark price is usually used to prevent you from getting stopped or licked if on futures exchange fat finger. So let's say you have a short from 15k or something, and a stop loss at 15.1, and then suddenly you get a fat finger to like 30k or something. The mark price is the price that will liquidate your position. So even if you get a big wick, you will not get licked. You can also use mark price as a setting in your stop loss in the same way. And in some of the contracts, the perpetual contracts, the mark price is just an average between some exchanges used for reference. In some futures pairs, it's calculated from the same average price, but there is some time limitation and yes, how long until the contract is expiring and stuff. Some extra calculations in the formula. So, what happened in this YFI pair? So this is the time period I was talking about. Someone in the chat in the Twitch channel notified me about some insane movements in this pair. And I came in and saw the huge wicks. And I also had the index price on. So I saw that the price was way below the normal price. So what I did, I just went in here and then just typed in some random number and saw, okay, let's do an order like this. And then I did an order and just saw that the order value, the order cost was below 1% of my account, the risk. So even if I got licked on this one, I would only lose normal amount. So I did an order, and then just 1 second after I did the order, it wicked again from the 12k area. And then I filled my order. So I had a position from 8k. And then I went in, did upside, and I used to reduce only just to be sure, just in case some order I didn't go through. Just sold it again. On the limit price, I did a few of the something like this. I click sell. So I instantly flipped. I didn't flip, I sold, I took profits. And even on this position like this, let's just test. So 500. And they got 4 swings in this price range. So just a decently small order, 0.18 BTC profits on 1 swing. And I did this multiple times. And I have also many accounts. So I actually did it in several accounts because in some accounts, at least later, I had orders in ladders in this range. And I got filled in the 10Ks and so. And I wasn't able to do new orders lower because I already had a small position. And the liquidation price, my new order will be below the liquidation price of my new position. So how could I do this? Because wouldn't I get licked? You would think so. But the main point here is the mark price, the price that will liquidate your position, was all the time in the 11k area. It was actually much lower than it should be. This was because of the extreme situation. Because what was happening was that it dumped a little bit, and then a lot of people got licked. And there was not near enough liquidity in the books to handle these large liquidations. And that pushed the price down. I think I can zoom in a little bit. That started the first number of wicks. So in this, this is 1 minute candles. So in this time frame, I didn't catch the first ones, so I don't know how many times they did. But I got in myself 4 swings in this range, from 8k to 12k, just buy and sell. And the thing is, the mark price was in 11k range, and as long as the mark price is above my entry, you can't get licked. Of course, the market price could go down. The market price was already very low, so it was quite unlikely. But still, in my first orders, I did proper risk, and in the later orders, only risked profits from the previous trades. So yeah, it was house money. Yeah. Also, one of the big problems here, and I think a lot of people lost a lot of money here because they didn't play this right. So my point was, I did maximum leverage to reduce my margin, because that's the only thing I can lose if I get licked. It was the margin I used for the order. I didn't use a stop loss at all, because that would be bad. It could just fill me on a wick, stop me out and sell at the bottom, and I would lose a lot of money. So I did orders in the 10k to 8k range, got a lot of fills, and what was happening was the spread in the books, they were enormous. So the buy side had 8k and 10k, and the sell side had 12 and 13k. There was big liquidations pushing the price down, selling into the buys. And I think also a lot of people try to short it with market smash. But the moment they market smashed, they got filled at the bottom, more or less, because the buy side was at 8k. So they mashed in, but they were instantly below the market price. And if the leverage was big enough, like more than 5x, they would get instantly licked. And also the same for buy side. If the market smashed in, they would get filled at 13 or something, and then the market price was still 11. So they would also get licked. And this way, it gave a lot of liquidation orders, pushing the price up and down, up and down, up and down, just filling my orders left and right, sell, buy, sell, buy. So it was super great. I had 4 accounts doing this, and I got a lot of swings out of it. Even this small demo account, I started out with 0.1 BTC, and I showed people later that evening, showed that I had 0.7 BTC, so I made 0.6 BTC in this account alone. And yeah, this is my small account, just a demo account. So yeah. No, the problem wasn't that people used mark jackbox or something. The problem was that it was an enormous spread in books, and if people market sold, they got filled down here, and if the market bought, they got filled up here. And since the market price was in the middle, maybe 2k below or above, depending on the direction, people got insta-licked. So the trick here was either the safest way was to do limit buys down here. Remember, the price was much lower than it should be because of all the liquidations. So it was much safer to buy down here. And even if it went to 0 in a big wick, you wouldn't get licked on this one. And after all, after the first couple of orders, I was only risking a house money anyway. So as long as market price is above the entry, you cannot get licked on this one. So several times I had orders in 10k zone here, and I even wicked well below my liquidation price, but it wasn't a problem at all because the market price was up here. So it was very nice. I got my last profit targets and my longs up here. I didn't actually hold it. I'm one of those just get in, get out people on this stuff like this. I didn't trust it at all. Of course, hindsight, I should have kept some of the position, but when they went up here, stopped the liquidation, stopped pushing, I didn't get any fills. So I had some resting orders in this range, but they kept front running me, and I didn't get that re-entry. So in this range, I actually played against the insurance fund, I think, because a lot of people got licked, even more people got licked because they tried to short the bottom. And this situation just filled my orders over and over again. So it was extremely nice. I think I saw 50 or 100k liquidations in the books all the time, just flashing down, filling my orders, then flashing up again, filling my profit targets, flashing down, new orders, flashing up, profit targets. So it was extremely nice to be able to be part of this. And even though BitMEX has been struggling with overloads very often, I had no overload issues with this one. And this situation was pretty much what happened when Bitcoin went to 4K and 3600 last time. But the problem then was that people couldn't enter. Even the API was overloaded. So, and the few people that got some orders through, most of them just did the completely wrong thing. It was huge spread like now, and if you try to short it, they will get filled on the bottom and got insta-licked. Because the mark price was in the 4Ks and the last price was in the 3600 range. So yeah, this was really nice. But to play this, you had to know how the exchange works and how liquidation works. Because most people, they saw the price down in 8Ks, if they saw it at all, used market, smashed in, licked, didn't understand what happened, tried again, just lost money. So those people just filled my orders. So yeah, very interesting stuff. Yeah, if this can happen more often, I don't care about low liquidity and BitMEX at all. I praise it. Yeah, so yeah, it was one of my most profitable days in crypto for a long time. And my account size is not that small, so that's decent. Okay, thanks for listening. Bye.